Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 625th video, baby. Yeah. 625 technical analysis futures trading videos for you and more to come every day. Traders, this particular video is being filmed on Thursday night for trading on Friday, August 27th, 2010. This video is for trading tomorrow. It is not a longer-term view. Tomorrow's trading, okay? Thursday night for Friday. Traders, before I get into what I want to show you for this evening, I must remind you that futures trading is risky and can cause substantial financial loss. Traders, futures is not suitable for all traders or all trading accounts. If you do not have risk capital, if you do not understand this game, if you do not have money to lose, please do not play the futures markets because let me tell you, they're merciless and they take no prisoners. But for you cowboys out there that don't mind riding the Bronco, baby, rock and roll, because we find the analysis for trading on Friday to be extremely interesting. Right off the bat, traders, I'm going to tell you about all the major, and I mean all major U.S. indices have put in swing days, qualifiable swing days on Thursday. If you remember Tuesday night's video for trading on Wednesday, I showed you some swing days that were not qualifiable. I waved everybody off of getting long a swing day on Wednesday. And traders, that was absolutely good advice. The analysis was dead on. Swing day for yesterday did not work. It didn't look like it was going to work. It didn't look qualifiable. It was not qualifiable, and we did come off. Here we are now, Thursday night. The exact opposite swing day has been put in. Yesterday, we had a bullish swing day. Today, Thursday, for trading on Friday, we have bearish qualifiable swing days, and I'm going to show you some charts about that. What makes it even more interesting is that the technical indicators are not calling for the downside, even though the swing day is in place in all the U.S. major indices. At the same time, the euro currency, which usually trades hand in hand with the S&P. If S&P's up lately, euro's up. If S&P's down, euro's down. Those two, according to analysis, are supposed to decouple for Friday's trading, and we actually have bullish signals for euro. Euro has held the OTAPA, the Omni Trading Academy's proprietary moving average, for 5 straight days in a row, and now has bullish indicators, technical indicators, to go along with it. That's what's so interesting, because usually S&P and Euro will drop together or rise together, but that swing day formation that we're going to show in the chart segment is bearish U.S. indices, but the technical setup in Euro currency is absolutely bullish. So very interesting day, a very interesting evening I've had this evening doing my analysis, and tomorrow should be very interesting trading. I expect a huge amount of volatility on Friday. GDP comes out in the morning. People are afraid of it, and it's going to be interesting, so make sure your stops are in. Traders, before I go further and show you some charts, the comment question of the day. Let's hear that bell, Mikey. Yeah. Ding dong, let's go. Comment question of the day. Traders, today's comment question of the day is not in my pocket. I believe that I forgot to put it in my pocket today. However, just before I got up here, I did read it, and I do remember what it said. I'll try to get it out of memory. Mikey, the financial student, correct?
Finance student.
The finance student from Australia. Hey, the finance student from Australia. He writes into us today, and he says, the problem with this segment is I'm supposed to be opening an envelope right now with the question in it, and what am I supposed to open an envelope with? Oh, boomerang, right from Australia, look, and it's got some koalas. The finance student, this should make you feel right at home. In any event, I was supposed to be taking this out to open up your envelope with, but the fact that it's already open, I guess we'll shelve this for now. Boomerang time, you ready? Let's come back and hit me. Nice catch. All right. So, the finance student from Australia, he had a question. First off, he started off to say, Oscar, your videos are wonderful, and thank you so much, and your TA has been spot on. Finance student from Australia, thank you for that. The question is, Oscar, do you use volume, and what weight do you put behind volume in your technical analysis? Two-part question. And what happens with volume at market tops and bottoms? And I have an answer for you. Absolutely. You know what? I do not really look at the volume as much in today's markets as I did in the last 20 years of my career. The last 5 to 8 years of my career, I've actually been able to shelve looking at volume every day. I look at it at key areas in the market because, traders, it's not like it used to be where the pit session opened and a bunch of guys screamed and yelled for 5 hours and everything closed and you had volume and open interest and it meant a lot. These days, the markets are basically open 24 hours. People come flooding in from every country. They come into the markets. They pull out of the markets. Open interest has become almost meaningless unless you are in a commodity market that takes delivery. The volume has basically become untrackable because it's huge volume, it's small volume, it's in, it's out, they're in and out so quickly. Even hedge fund managers come in and jump right back out these days. So no one's in there long enough for the volume to be all that meaningful. So the first part of this answer is no. I really don't put a lot of weight behind my volume as much as I used to in daily technical analysis. Second part of this question, what happens to volume at market tops and bottoms? Now that is interesting. The finance student, this is what will happen. When you reach a bottom, it's usually one of the biggest volume days you've seen in a year. Oh, the volume happens, well, bam! And then you have the big spike down and the stoppage, and you rally back up out of the hole that day, and lots of times that's a capitulation day, and that's when your volume explodes. At tops and bottoms, that is what happens with volume. The finance student from Australia, thank you so much for your letter, your comment, question. I hope that helps to answer it for you. Traders, we get lots of questions. They're coming in every day. Please continue to send us in your comment questions, and I will be more than happy to answer them for you in these videos. All right, traders, what do we got coming up? We have a chart segment coming up that will depict all the qualifiable swing days in the U.S. indices, and then I'm going to show you why the euro looks bullish even though its sisters, the indices, are heading down. Let's see what we got, traders. Let's go look at some charts. Okay, traders, the first chart you are looking at is the leader of U.S. indices, the Dow Jones Transportation Average. We recognize that it does have the head and shoulders. We recognize that it is below OTAPMA, the Omni Trading Academy's proprietary moving average. And we recognize that we broke down slightly out of the right shoulder. But what has happened on Thursday by the close is we have posted a swing day sell. Now, if you recall yesterday, we had swing day buys, but they were only possible swing days, and we basically proved through technical analysis that they were not qualifiable swing days, and we did not take a swing trade. Very smart on our part for trading on Thursday. Now, Thursday night, on the close Thursday afternoon, we have a trade that looks like this. Here's your day, and here's your settlement. Now, the market rallied up higher than the day before's high, came back down and settled by its lows. That is a qualifiable swing day. So the leader has a qualifiable swing day for the downside. I'm going to rip right through these to show you all the other ones. NASDAQ has the head and shoulders formation, has dropped down slightly, but what happened on Thursday? We rallied all the way to here, turned around, broke all the way down, settled by the lows, went higher than the day before's high, qualifies, came down to the bottom, settled by its lows, swing day sell setup, secondary leader NASDAQ. Let's move forward. Traders, look at this next one, the Russell. What a beautiful swing day in the Russell. Rallies up, 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 puts in a big tail, turns around, settles by its lows. That is a qualifiable swing day. So the Russell, our third leader of U.S. indices, has a qualifiable swing day. Let's go take a look now at the big kahuna. Traders, the Dow Jones Industrial Average, the big broad market, a sell swing day. Granted, This swing day does not have a very big tail because the high is here on Wednesday and the high is here on Thursday, but it's enough of a tail because it settled so low to absolutely qualify as a sell swing day. Traders, I will say this. Technical indicators are not in favor of the downside or the swing day working, but when you see a swing day in every major U.S. indice, you have no choice but to take the swing day. So that is a swing day sell setup. Now, traders, we're going to go look at the S&P. S&P market is very interesting here. The S&P has a picture-perfect swing day. The day before, we bounced right off of major channel support, went up. Then on Thursday, we rallied all the way up to here, came back down and settled right by its lows. This day here, as you can see, we went higher than the day before's high. We came down and settled by its lows. Qualifiable swing day in the S&P September daily bar chart. Every indice I've just put before you had a qualifiable seller's swing day. These I can qualify. These I will try to take because they're all in unison with one another. Traders, now that you've seen the S&P and all of the other U.S. indices that we like to analyze before coming up with a trade, I would like to show you the euro currency because very interesting what you're going to see here now, traders. Euro currency daily bar. It does have a head and shoulders, traders. You have a shoulder right here and you have the head right there. If I fill this in for you, you'll see it materialize. And here's your shoulder. This head could be a little bigger, actually. It's like that. Shoulder, head, shoulder. However, within the right shoulder, we have held OTAPMA, or the Omni Trading Academy's proprietary moving average. In the last 5 days, we have held it 5 out of 5 days in a row. But if you want to look back, we also held it the last 3 times we came near it, had a little rally, and then held it, held it, held it, held it, held it. Traders, when a market holds our OTAPMA average that well, we have to become bullish. Technical indicators, by the way, in the euro are very bullish on Thursday night. Let me show you those. Look at these right here, traders. They are extremely bullish, and that is a very bullish-looking formation right there, to be honest with you, on that bar chart I just had up. Now we are looking at the Commodity Channel Index, the CCI. You can see it's come down low. Both averages have crossed not once but twice. Bullish signal right there. Just below that, you have your DMI, or Directional Movement Indicator. When the red is pointing lower, as it is, and the green is pointing higher, as it is, that is a bullish signal once again. Then, of course, below here, you have slow stochastics, traders. Look at what happened with the slow stochastics. They have come all the way down to the area where when they get here, they are well oversold. And usually you get some sort of a bounce. Look at the bounce, look at the bounce, look at the bounce. And here we are now. That is a bullish signal. So traders, as crazy as it sounds, it looks to me like you may have a shot at euro going up on Friday while the U.S. indices get sold off. Let's see what happens. Pull your own charts, do your own homework, take a look at your indicators, look at euro, and absolutely look at those qualifiable swing days in the U.S. indices. So, traders, you've seen those charts. Now, those are qualifiable swing days, undoubtedly. Here's the one thing that I'm going to say, traders. I don't know that I want to be long euro and short S&P on the same day, so I might take whatever trade sets up first and then cancel the orders on the other. You decide what you want to do. It's absolutely conceivable that euro could have an up day while S&P has a down day. We've seen that many times before. The analysis is pointing that way. I'll take whatever trade sets up first and likely cancel the orders on the other. All right, traders, I want to get out of here because I hear alerts going. I want to see where markets are going. It's Thursday night. We got Friday. Yay, Friday. I love Fridays. Traders, will the swing days work? Well, I don't know. How am I supposed to know that? That's why a stop is your best friend, and never, ever trade without them. Because, yes, we know swing days work almost all the time when you call them correctly, but not all the time. Have your stops in, place them first. Anyone that trades the futures market without a stop, one day, I assure you, will be going like this. I can't believe I didn't. You get killed when you don't have stops in. What happens to people is they get into a position, they go, you know what, I'll risk 8 points, and if it goes 8 points, I'll get myself out. And when it's 7.5 points against them, they go, you know, maybe just a few more points, and it goes 10 points against them. Then they go, oh, now that I'm in for this much, I might as well just put my stop 18 points lower and see what happens. And the next thing you know, on something you thought you'd win $500 on, you lose $3,000. That is not the way to play this game. Put your stops in. Put them in first and adhere to those stops. If they get hit, let them get hit. They are called stop loss protection orders. That's what they're for. All right, traders, that's it. I'm getting out of here. If you like the analysis in this video, please take a look at our YouTube spot. We have 624 other videos just like this for you to learn from. Traders, give me a call anytime, day or night, 702-629-4755. And please come on down to our site. The site URL is www.livewithoscar.com. Come to the site, jump into our free chat rooms where you will find me, and I'll be there to help you become a better analyst. All right, traders, I'll see you at the desk. I'll see you in the chat rooms, and I hope we have a great day on Friday. It's been a great week so far. Remember, keep your dukes up at all times and keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.